Good evening, friends. Welcome to another video of Market Profile Engineer. So, as always, I tell this is just an educational video wherein I'm recording my emotions and mindset while trading. So, this was a long-term activity record where sellers were dominant. Volume, you can see it is still low, 47 lakhs, and value rate was overlapping lower. In such a kind of scenario, it indicates that trend is weak and continuing, and sellers are still in strength. So this was a kind of opening. So previously also I told don't trade in such kind of a market when the volume is low. We'll be trapped in whatever trade we invest. So it is better to have a selling. If we are a sellers, we can do good, but as a buyer, it is difficult to survive in such kind of market. So market opened below the previous day value area. IB was medium, which indicates that it will be a normal variation day or a neutral kind of a day. So it was a neutral kind of a day. Uh, you can see it opened A period, it went down, then again a B period, it went down. It took a reverse from a POC previous day with some value POC and it went up. Then again it came back to that POC. That was a trading setup. So whenever it is a open outside range, it can be a chance of a trend day. But here, as the volume everything is low, don't expect for a trend day in such kind of a market. So here, even though we enter, we will be in loss because neither the sellers nor the buyers are gaining. Only thing is that here you can see D period. We can get a reversal that I can show you clearly in the chart how we could have captured that one. So this is the kind of a day wherein if it is a medium day, it will be a normal. If it is a medium IB, it will be a normal variation day or a neutral day. So it was a neutral day or a non-trend day. So that's it. My mindset was I was disciplined because I never take trade. I decided not to take a trade in such kind of a market, and conviction is also correct. So I will show how the we could have entered a trade. Here I'll make it a 30-minute. So this was the levels which we indicate marked yesterday. So this highlighted area is the balance area, and below is the gap is imbalance area. So market actually opened in yesterday's value area means below the previous day value area and in a balance area that we have indicated here and once it started breaking we need to see the other balance area. So here I would mark it and this black one is the POC. So we can see how it behaves. Market opened in that balance area. It tried coming to the bottom balance area, but it exactly reversed at the POC. You can see this candle and the volume also, if you see, it is huge. But though it is having a huge selling volume, it formed a candle. Means sellers are weak or sellers are being absorbed. So in 15 minutes, if you see, we can again identify how it is behaving. So here you see exactly at that POC. This is black line is a POC. Here a huge volume means 72,000, 64,000, 54,000 was formed. So this will again act as uh, a region where absorption can happen and it will decide how sellers can be dominant. So here you can see market did not come to that area. Here it tried coming, but it rejected and it started moving up. So it was clearly a POC rejection. So it will move to the previous day value area. That it happened, and it again rose from that POC previous area POC, and it again comes to the last balance area POC. So here absorption is happening. So overall, if we see, it is oscillating from a balance area to the next balance area. So if we catch a trade in that sort, we can gain because actually sellers will be gaining in such kind of a market. So we need to be cautious while trading. So it is better to avoid such kind of a market if we are a buyers. Thank you.